Good morning from Los Angeles. How's everybody doing? Couple of business items. I don't know if everything is working well, so I will need your help. Giving me a thumbs up if you guys can hear me and see me. Welcome to Power Hour Friday. What a week, right? What last couple of weeks we've had. Pretty volatile, as the headline of the um, thumbnail or the episode indicates. How to survive volatility, how to survive volatile markets. Well, you're at the right place. So before I go any further, um, a lot of questions have been asked about how do I follow you? How do I follow your trades? I put them up. First of all, Chris is on vacation. He's my YouTube manager. He takes care of all the background stuff. I'm not even sure if I set that live stream correctly. Uh, if I did, if you guys can see me and hear me, please put a thumbs up in the chat. Um, and then I know I'm live, because I don't know. When it comes to technology, I'm okay. I mean, I'm good enough to be dangerous, but I'm nothing like Chris. Get back so we can have some screenshots, some topics. I don't even know how to do screenshots, so I'm going to wing it and go through my charts, obviously, answer some questions if you guys have any questions. A couple of things. So please go to www.sergioavidian.com and subscribe to the free newsletter. Okay. There is a free newsletter that I'm sending out. I think the last one went out this week. It's about finance, right? And you guys will learn quite a bit. Secondly, my YouTube channel is growing. I'm almost at 1,100 subscribers, which is great. Thank you for the support. Please share, right? Good information. So going back to the subject of how to follow me on my little Robinhood account that I opened a couple of months ago with $1,000. So I don't even know how to put that screenshot up, but I'm going to show you guys the account. Hopefully you guys can see it. But I will post that on the community page. No worries. So can you guys see it? It started with $1,000. I'm almost at 4. Today I had a big day. If you followed my trades, you would have made some money. I'm at 38, 82, 33. That's live. So the spike that you guys see, I had options on a company called Upstart, which I mentioned, ironically, last week. And can you guys see that? 38, 82, 33. That's how Robinhood does it. I love, actually, Robinhood for small accounts. So let me see. Okay, here we go. If I can do it, and you guys follow me, and I will tell you how I told you already, guys, how to follow me, how to follow the trades, albeit with a delay. Okay. The delay I cannot help, but I'm trying to figure out a way for you guys to actually get the live trading. Like the position that I was in for a couple of days, I'm already out. Okay. So we're at 38.83. I'm about to go short the market again. I was short the market. That was one of the areas I made money on this account. Obviously, my larger Schwab account, actual trading account, is of course benefiting from what I'm doing, because I'm pretty much mirroring what I do there here to a point, because money is tight, right? You start with 1,000. You have to hit singles before you can hit home runs or doubles or triples. Okay. And this is not the time to hit doubles and triples and home runs. You can't swing for the fences right now. You're going to get whipsawed most likely, and you're going to blow your account. So what I'm happy about it, obviously, now I have more ammunition in the weapon. I can be in different positions at different times. I can put spreads on. So the higher the equity goes, the more things I'm able to do. I still can't short stocks. I can only buy puts, which we talked about. I told you guys about the books that you need to read about options. The important thing is educate yourself. I'm not expecting you guys to get to my level, but at least we can, when I say something, you guys, it's not going over your heads, right? You guys are somehow understanding what I'm saying to a point. And I'm not going to make it that complicated, obviously. I can make it as complicated as I need to be, but I don't need to do it. So the way you guys follow me is there is this app, no joke. You guys can go back. Actually, there is a video that we put out, what the procedure is. The app is called Power. The app is called After Hour. No joke, After Hour. It's like a purple app with a smiley, I think, in it. It's on Android and iOS as well. So all you have to do is go download the app, obviously register just like any other app. Once you do that, I've done the work already. And I've attached my small Robinhood account and got it verified through the app. And my screen name, or my, whatever it is Serge, SERG, the number 8, STOK. All right. Then you start following me there. And then every day with few updates, it'll give you my positions. It'll give you my live equity. So I'm trying to be as transparent as I can in the small Robinhood account, so you guys can benefit from it, follow it. But what you can benefit from it the most is watching me live or watching the replay of the live. And when I'm doing the charts, take notes, what stocks I'm watching, right? I mean, if I'm doing it, if I'm talking about it, that means I'm going to be actively trading those stocks in coming weeks or next week or next couple days. And if you have read the books and understand a little bit of technical analysis, understand how to participate in most of these stocks, even with a small Robinhood account, you can buy fractional shares. Again, this is not, I'm hoping I grow this account to 100K from 1,000, but it's very difficult. Okay. However, it could be done. So look what happened to the markets, right? Everything was going well. I was talking about, oh, that's an uptrend. This is an uptrend. Everything is wonderful. NVIDIA is wonderful. Triple Qs are going up, right? And then something happened, right? Overnight, the attitudes changed. And sure enough, everything sold off in stock. NVIDIA, let's say, it sold off from 125 down to 92 within a matter of a couple of weeks. So the volatility, I talked about you guys about that, called VIX, VIX, the volatility index. So VIX, I'll answer the questions at the end, but to answer it now, I will post it on my YouTube channel, the small Robinhood account screenshot. I do it every week. All you have to do is go to the YouTube channel where it says videos, shorts, live. You just swipe to the left. The last item says there, it says it's community page. So I do post some polls on the community page. I post the small Robinhood account weekly equity levels, right? And so long story short, you guys can follow me on that app as well, called After Hour. It's free, right? It doesn't cost anything. So all you guys have to do is download the app and follow me there. My avatar, I don't have an app. I think I have my picture there. You guys will see it, but it is Serge 8 stock, SERG, number 8, STOK. And the other thing I think I did is I messed up the scheduling of this live. Last week I had almost like 20 people. Hey Lynn, how are you? We'll talk about your purchase. Not exactly, but we'll talk about it. I'll show you the chart, what I think is going to happen. Yeah, that's where we are. So we had massive volatility, right? Market sold off. In NASDAQ, in triple Qs, it sold off from 500 to down to almost 425 at 75 handles. We call it handles or points. That's massive, right? That's about 15% or 12 to 15%. Markets don't move the way they do. Now, why did they do that? There is a reason for that, right? If you guys watch CNBC, or if you guys, watch those jackasses on CNBC, the head jackass being Kramer, who has blocked me. He blocked me literally, like I'm someone. He blocked me on Twitter. I mean, it's my badge of honor. Hey, Kramer. So he, you know, I don't block anybody, right? I mean, I have a couple of idiots that do follow me, but I'm just kind of mute them and then I'll just let them be. I just, what's the point of blocking? People have opinions about everything these days, and then, everybody's opinions to themselves, knock themselves out. So, what have we been talking about it for the last 10 days, right? Market sells off. Oh, they're all panicking now. They're all going like, oh, what is this happening? What's happening? Well, all you have to do is watch this channel. I mean, for the last 2.5 months, like a broken record, I'm going like, my bias is negative. Please be careful. It's about to break. And sure enough, things broke. Well, you guys heard, if you do what CNBC and some of those pundits out there, with their suits and ties, unlike me with my little t-shirt and a cap, they started talking about, this is not funny actually, they started talking about something called the carry trade. Okay, I'm going to explain to you guys what the carry trade is. In fact, there is a video on the channel that I did talk about it about a month and a half ago. I in fact went and rewatched it, and it was like so dead on, right? All right, so carry trade means, as we know, there is interest rates, different levels of interest rates around the globe. Okay, German interest rates versus Japanese interest rates versus US interest rates are not the same. They're not going to be the same. So what is that? Okay, so let's talk about that. Japan has been in a deflationary spiral for the last 20 years. Okay, and Japan had interest rates at zero, pegged at zero, literally zero. In fact, there was a time during the pandemic that went negative. Literally, German interest rates did the same thing. So basically, you give the government the money or buy their bonds and you get negative return, but then supposedly your money is safe. I'm going like, what kind of shenanigans is that? Nobody gives me money and then I give him less. I got to give him some sort of return. But in Japan, the return has been zero. Like, you could buy their bonds, you're just not going to get a return. You're just parking your money, right? Because they have no inflation. They have deflation, which is the opposite of inflation. Now, inflation is bad, as we know. I quite often talk about it. Inflation is like a tax hike on the average American, but around the globe as well. Or imagine if you're a Venezuelan or if you're an Argentinian. Inflation in those countries per year is 50, 60, 70%. Okay. That means their currency is toilet paper. It's not worth anything. So that's why they raise their interest rates to attract foreign investments, foreign currencies or mostly US dollars. So that's called the carry trade. So what carry trade is, there's trillions of dollars sloshing around the globe. Okay. From petrodollars, trade dollars. Obviously, we print a whole bunch of it. I talked about it last week, right? I did a video. Please go watch that. $35 trillion we hit our federal deficits. I'm going like, this is horrible. But so what happened is that a lot of hedge funds, billionaires, a lot of money, what did they do with that carry trade, right? Let's talk Japan versus US now, all right? So Japanese interest rates were at zero for 20 years, okay? Then after the 2008 financial crisis, we went to zero. It's called ZIRP, ZIRP, zero interest rate policy. Okay. So the differential between the Japanese interest rates and the US interest rates were pretty close. Like, let's say we had on our short-term T-bills, okay, which is the shortest term investment vehicles the US government offers as IOUs, was 0.3, 0.4. Well, Japan was zero. So there is no carry trade there. But over the last 2 years, what happened? US inflation spiked. What did the Federal Reserve do? Raise rates through the roof, right? In an unprecedented fashion, our interest rates went from zero, okay, to over 5% in a very short period of time. Why? Because higher interest rates is the antidote for inflation. How do you kill inflation? Man-made, obviously. The reason inflation came around was because, we had the 08 financial crisis. We turned the printing machines on and then pumped billions and trillions into the economy. And then the big one was the pandemic, obviously. US government, the Federal Reserve mostly. That's, by the way, because of fiscal policy, what's happening there, okay? And the Federal Reserve printed, well, they don't even print, but let's say they printed, $8 trillion and pumped it into the economy. So what did that do? Inflation's common explanation is too many dollars chasing too few goods, okay? Obviously, there is a fundamental problem there. So it's supply demand like everything else. So what happens? Well, when there's so many dollars chasing too few goods, prices go up. There's a lot of demand and not enough supply. So Federal Reserve, to kill inflation, started raising rates. So now think about what's happening. Japan has 0 interest rates, 0. We have 5% interest rates. Now, what do you do as a billionaire or a hedge fund or an institution? Or average American can't do that. But there is a game that's being played behind the game that controls pretty much everything here, as we know. So what did they do? They went to Japan, okay? They borrowed in Japan at 0% interest rates. 0, right? Then they brought all that money into the US and invested, let's say, in treasuries at 5%. You guys see what's happening now? So 0 versus 5 is return. Now, you guys have to also understand there is currency risk involved. Because in Japan, when I'm borrowing money with Japanese yen. I'm not borrowing with US dollars, okay? So there is currency risk, but the currency risk is very minimal. So I can go convert my US dollars into Japanese yen, borrow the money, then come back and then convert it to US dollars and then buy those bonds at 5%. So I'm automatically gaining somewhere around 5% return free because I'm borrowing at 0 and then investing at 5. But they went a step further. Greed is always greed, right? So what did they do with that money? Not only they bought the bonds, right? But they went and bought that Mag 7. They went and bought the S&P 500. By the way, this is not just U.S. institutions. A lot of Japanese hedge funds and institutions did this too. They're borrowing at 0, coming in U.S., investing at 10%. And when they're done investing, they take the money back. They borrowed at 0, made 10% on their money. It's trillions and trillions of dollars, right? So you guys have to understand this, how this works. Well. The Japanese government saw a hint of inflation now after a deflation of 20 years, dead, basically. Unlike, you guys can understand this in a simpler way, is what has happened to housing prices in the US, right? They've gone through the roof. In Japan, housing prices have been exactly the same for the last 20 years. There is no inflation. So the Japanese government started seeing, after 20 years of free money, they started seeing a hint of inflation. And in their wisdom, what do? They go, okay, we're going to raise our rates too, just like the US Federal Reserve did. While now the Federal Reserve is thinking our economy is going into the tank, I have to cut rates. The Japanese go, yeah, we're going to raise rates. They raised it, people, listen to this. They raised it from 0 to 0.5%. Okay? All right. So now we're lowering rates. They're raising rates. So do you guys see what's happening to that spread? From 0 to 5, we went to 0.5% and 4%. Now we're down to 3.5. Well, there is leverage, massive leverage that this is done with, right? So the unwinding of the carry trade is happening now, right? They call carry trade. Well, there is winding of it. You borrow first in Japan and then you invest in the US or around the world, whatever you're doing. But then when the Japanese rates were raised by 0.5%, what happened? The Japanese yen gained literally 15% in a matter of 10 days to the US dollar. Again, remember, there is a currency risk here, right? We have to exchange currency all the time when we're doing this investing. When everything is stable, I exchange my US dollars to Japanese yen, and then I can exchange it back from Japanese yen to US dollars without currency loss. There is a risk here. So when the Japanese raised that, the Japanese yen's value against the US dollar skyrocketed by 10% almost in a matter of a week. So now I'm borrowing at 0, earning 5, let's say, in the US treasuries, but then I just lost 10% on my currency exchange risk. Think about it, right? So now instead of making 5%, I'm losing 5%, and I'm leveraged to the moon by 30 to 1. Now where are we, right? So now the unwinding of the carry trade is happening, okay? And most of that money was invested in Mag 7s and NVIDIAs and Apples and Googles and Amazons and US stocks and S&P 500 and the triple Qs. Well, that's why we had that, remember I told you guys before, right? Market goes up the stairs slowly and takes the express elevator down. That's exactly what happened. Go back and watch some of the other power hours. You guys will see. So is the unwinding of the carry trade over? How big of a headache is this? I think it's just starting. According to some numbers that I looked at, you can't get the exact numbers because obviously these are all institutions and you don't have access to their books. According to some reputable people that I talked to, the carry trade could be, think about this, as high as $20 trillion worth. Trillion with a T. Okay. Now, not all of this has to be unwound immediately, but there are people who are in trouble. And the prime brokers and exchanges don't wait for these people. They call them up and go, you have a margin call. You need to bring more money to carry this trade, continue with this trade. If you don't, they'll automatically liquidate you because they're not going to lose money on you, right? So there's thresholds in all of this. I've had margin calls in my life. It's not fun. So automatically unwinding, and that's why it's adding massive, to the volatility. And the VIX index, the volatility index that I talked about a couple of weeks ago, again timely, it was at 12. It went to 16. I said, watch out. And on the day that was the Black Monday, last Monday, okay, where I was tweeting my butt off because I was short the market, what happened? Markets tanked, crashed, right? Because now you have the unwinding of the carry trade. Now you have U.S. institutions selling to raise cash. It's a mess, right? It's a man-made mess, but it's a mess nonetheless. So, long story short, now you guys understand why volatility has picked up. And that morning, by the way, that volatility index that I showed you guys the chart of, which was 12, went to 16. I said, watch out. That morning, the volatility index went to 60, 60, right? So there's a good thing and there's a bad thing about that. When the volatility index spikes like that, it's usually pretty close to a bottom because it's an inverse indicator, as I said that before. When VIX spikes, markets tank, but then it's pretty close to a bottom. When it gets to the 60s, it's definitely pretty close to the bottom. And what happened the next day, Tuesday? Market spikes, volatility is getting unwound, but now volatility index is down all the way down to 21, 22. It went from 12 to 60, now down to 21. I'm pretty sure it's not going to go back to 60, but now we are in a period of increased volatility. So who is that good for? Who is that bad for? It's good for me because I like volatility. That's why, let me see my little Robinhood account. Okay. All right. So my little Robinhood account is, there you go. I'll post this on my community page. 38, 55, 34. The spike you guys see is my upstart position that I had, UPST. I said that to you guys last week. So I started with 1,000. I'm almost at 4. And for the next leg down, I'm going to go short the market either today or probably tomorrow. I mean, not tomorrow, by Monday. The other risk we have now, we have geopolitical risk in the markets, right? Everybody was expecting bombs to fly from Iran to Israel last weekend. Of course not, but everybody's expecting they're not going to do it. They're going to do it. They're going to probably lull us to sleep, and then one night we're going to wake up, and rockets are flying to Israel and Israel's dome, and U.S. Carriers are trying to block those, right? So that's what I see. That's what I think is going to happen. And so volatility is sticking around. How to survive volatility? You have to be really nimble. You have to have your levels to get in, levels to get out. It's not going to be easy, but then that's where I make most of my money, right? When the markets are grinding constantly higher, I can't make money, especially when I have a, negative bias, which I had all year long. Okay. So negativity, volatility is good for me, and that's why my account's doing what it's doing. But the other thing is, you have to be really careful. You have to hit singles and doubles as opposed to, trying to hit home runs. Okay. So let's see the questions. There's no questions. I don't know. I don't even know how many of you are here. I definitely messed up this live stream, I'm pretty sure, but then you guys can watch the replay. Let me add my charts to the screen. If you guys have questions, please shoot. Okay, can you guys see the screen? Yes, you can. Okay, cool. Here we go. Okay, so let's go through the usual suspects. Let's look at the screens. So let's start with the S&P 500. S&P 500, as you guys can see on the upper right-hand corner, it was about 565 level. It went all the way down to 511. That was Monday's low. That's 10%. 10% is pretty big move, right? In a matter of a couple of weeks. If you were short, you made a ton of money. So I have my resistance lines drawn. I'm going to short the market if the market goes up higher. I'm expecting it to roll over, retest the low at 511. If not, actually retest the 200-day average at 505. If that breaks, because this uptrend line that I've been showing to you guys for 2 months has been intact. I'm highlighting it. It broke. Okay, we broke the uptrend. Now there is an intermediate term uptrend way down here at 440 levels. I don't think the market's going to get there on this move, but ultimately when technicals are broken, it takes a long time to remedy the technicals. What happens is that, as you guys can also see, the volume, that flush came in the last Monday, massive volume. Now the market's rallying on low volume. That means there is not enough energy. This is called a snapback, right? Dead cat bounce, people call it. Because what happens is that the rubber band gets stretched as much as it could, and then it snaps back, and then it gets stretched again. So that's the way you guys have to figure out the analogy of this. So that's the S&P 500. Let's go to the triple Qs, which is the NASDAQ 100, which is where NVIDIA lives. This move, obviously, NASDAQ 100 is a lot more volatile, obviously, but now we had a short-term uptrend, which broke right about 480, 490. That's where I went short the market in my little account, and as well as the big account. We had an intermediate-term uptrend, which also broke like hot knife through butter. You guys see what's happening here on the upper right-hand corner. And the value of triple Qs went from 505. Think about this move, guys, to almost to 420. That's 85 handles, 80 handles. 80 handles, about 13%, 15% in a matter of 2 weeks, right? Remember what I said. Market goes up the stairs, walks up the stairs, and takes the express elevator down. And that's what happens. Now we're bouncing from 420. We're up to 450 already. I'm going to go short the triple Qs right about 450 to 455, which is either today or Monday. Reshort for a retest of the low. Now, the problem with this is going to be that there is a really long-term uptrend coming into play right about 420. If we break that, all bets are off. I think then we're looking at 412s, 410s, under 400s actually. But time will tell. Again, I have my lines drawn, right? If you guys read the books, technical analysis books, I have my resistance lines drawn now, meaning that's where I need to take action. 200-day moving average held by the skin of their teeth. It actually broke, it got flushed, and now it's bouncing back up. So the bias is negative. Market's in a downtrend now, short-term downtrend, still on a long-term basis, it's definitely on an uptrend. See, I can pull it back and you guys can see what I'm talking about. There is an intermediate term uptrend. The long-term uptrend, like I'm talking real long, is down to like 320s on the triple Qs. This is 3-year look, okay? See this big flush, right? This is what just happened. This is because of the carry trade. But then we had flushes like this before. And if you're going to invest, I talked about dollar cost averaging. I talked about all these things, okay? So you guys need to understand, and there is no wrong time in starting to invest. Well, on this pullback, one more pullback, if we do get it, which I believe we will, start dollar cost averaging, put 50 bucks, 100 bucks a month in a brokerage account, and without thought, at the same time of the month, buy whatever you can buy at the triple Qs or S&P 500, because although it does have these flushes, although it does have these drawdowns, like this last drawdown in 2021, 2022, when the Fed was raising rates, the triple Qs went from about 400 down to about 250. That's massive, right? That's over 35%. So, but then what happens, right? Look at the trend, right? And it snaps back and it goes back. And this is 5 years. So going back for long periods of time, and this is the same, this is the flush of, on the lower left-hand corner now I'm circling, this is the flush of COVID, okay? On a long-term basis, stocks do well. See, this is going back 10 years. I mean, yes, we had times of distress, obviously, but then every time we come out of the distress, we make new highs. And I don't think anything is going to change. But for a swing trader, position trader like me, I take advantage of volatility. Let's look at NVIDIA. I mean, look at NVIDIA, right? Stock was at as high as 140. Okay, people? All right. It took the stock a year and a half to get to 140. And then it split 10-for-1. And please go watch the old power hours. When stock split, I have a video. I said when stock split, usually it's the end of the game. And then from 140, literally last Monday, stock hit 92, 91. That's 50 points, people. 50. I mean, that's massive. So there is definitely trading opportunities. NVIDIA is completely broken down now, short term for sure. I have my resistance lines drawn right here. I mean, I should be shorting NVIDIA any day now, about 105. And then, your risk is less. There was uptrends that completely got trashed. It almost got to but then I also have my support lines drawn, the green ones, right? 91 is support. 88 to 91 is support. I'll be a buyer of NVIDIA there. And I'll be a seller of NVIDIA about 110, right at the 20-day average or the 50-day moving average, EMA, okay? These are simple things you guys can do, simple rules to follow, but definitely in a short-term downtrend. Let's take a look at Apple. Apple, same thing. Look at, okay, it got up to 237. Within a matter of 2 weeks, it hit 195, right? So when this volatility picks up, these are the chances you guys can start buying these shares because, again, pulling back Apple 10 years, here's the chart of Apple in 10 years. It's an uptrend. Did it have meltdowns? Of course it did. But then these are amazing, amazing companies run by amazing, amazing people. I mean, you need to trust the system. And every time Apple had a meltdown, if you bought it, you made great money. You have to have a longer term perspective, but DCA, dollar cost averaging, works. You have to trust it, right? And there's no bad time to invest. I want to look at Tesla. Tesla is underperforming. Again, go back to power hours and watch it. When it was breaking out, I did the trade between 185 and 240. Then it went as high as 270. On last Monday's tank, it hit 180. I mean, you guys are to pay attention to these moves, right? We're not talking 5-6 points. We're talking multiples of tens of points here, right? So, but you need to be positioned correctly to do that. I was positioned correctly on the way up. I never shorted it. I even said I should short it. Again, I have my support and resistance lines drawn. So I'm going to draw one more support line live for you guys here, which will be at last Monday's low at 182, 183. So you have your parameters set up. You have your resistance line set up. This needs to go away. We need to remove that. We need to remove this. And then draw a new one. New resistance line right up here. Okay. So you guys got to start doing these things on your own. I mean, resistance lines and support lines. We talked about it. We talked about how you guys can figure those out on your own. So yeah, that's the mag. Let's look at Amazon. Again, look at Amazon, right? This is where, by the way, at $200, Jeff Bezos was selling billions of dollars worth of shares. And I did a video as insiders selling, a bad omen for the markets. Well, I guess he knew, right? 200. I mean, think about this, people. This is Amazon. This is a $3 trillion company. It went from 200 down to 150. It has completely broken everything. This is the weakest of the Magnificent Seven now. Earnings are bad. It gapped down. I mean, we're talking 50 points. We're talking a fourth of its value disappearing in a matter of 2 weeks. Now, you guys are going to say, well, Sturge, that's exactly why stock market is gambling. I don't like it because every time I do something, I lose money, but that's okay. It's not, you're learning. You have to learn. You have to assess your risk. You have to have stops, right? But, I mean, Amazon now is under its 200-day, under its 50-day, under its 20-day, under everything. Amazon is a short no-brainer, right about 170 level, or buy puts on it. Next week, actually, I'll talk about how to buy puts, where to buy puts, because I think market's going to be in trouble for a while. And let's take a look. Another Magnificent Seven in Meta. Actually, Meta is the best acting Magnificent Seven. Even with all this sell-off, what is Meta doing? It's just going sideways. I have my support and resistance lines drawn. It's the best acting, strongest looking stock. But now I'm going to pull back and show you guys, if you dollar cost averaged into Meta, what would happen? Let's do it. Okay. So this is a 5-year chart, right? Meta does have these brain farts for sure. Okay. So look what happened to the stock. After the pandemic, it was as high as 380. Literally, stock went down to 100 from 380. Think about it. So let's say every month you are dollar cost averaging right here and you're losing your ass. But religiously, you're investing because you believe in the stock, in the company, in the management. And then, this is not that long of a period time, guys. Okay. So I'm going to give you the top. This was September of 2021. Literally. Okay. 380. So let's say you bought it right at the top, the first purchase. And then for a year, you kept buying every month. Next month, you bought it at 340. Next month, you bought it at 320. Next month, you bought it at, 200, 200 and 180, 160, right? You're just buying, right? Dollar cost averaging. Nothing goes down forever unless you think Meta was going to go to bankruptcy, which obviously is not going to happen, right? And then where are we today? In another year and a half, we're at 540. Imagine dollar cost average down, dollar cost average up. If you had dollar cost average Meta from 380 to 100, your average would have been right about 180. Okay. And then you keep doing it on the way up as well, right? Because this is massively long-term investment, building wealth portfolio kind of a thing. Your average should be right about 180 to 200. Okay. Stock is 540. It's double and a half or more. What am I saying? Triple. Where are you going to triple your money? In what world? Not real estate, nothing else. So, yeah, I mean, those are the, Mag 7s, Microsoft. Yeah, definitely acting weak on its 200. It broke its 200-day. Again, Microsoft was as high as 470 on this massive pullback. It pulled back down to 385. Think about it, people. These are trillion-dollar companies. Literally on this pullback, trillions got wiped out. Trillions, okay? Just like they're stepping up and death on the way down. So now let's get into some of the small stuff, like where I made my money today was Upstart. I gave you guys this stock last week, and earnings came out, stock blew up. it literally just blew up. Okay. It was as low as 20 on Monday. This is Monday, 4 days ago. Okay. 21 actually. Right into the support. Look at I have my support line drawn already. Then I had my next support line now because it broke out. It broke out. Massive volume. Went sideways. Now today up another 10%, right? And that's where I made bulk of my money with the upstart options. Where do I think the stock is going to go? Any pullback should be bought on the stock now. It's above its 200-day. See, market is going down, tanking 10%. This stock went from 21 to 37 in 4 days, right? So, but you have to be in there. You have to have the balls. You have to pull the trigger, and you're going to go. So I'm going to put the charts up that I love going forward for at least a week, okay? This is Sleep Number. This is the betting company. Earnings came out. They were really good. Insiders are buying now. I don't have a position on it. It's still under its 200-day average. It's struggling here a little bit, but these are the types of charts I like, these long base patterns. Just patience, but at least it's on my watch list. Fortinet is another one. Okay, so I'll put the symbols on my community page. So UPSD, FTNT, SNBR, Fortinet. Earnings came out. This is a cybersecurity company. We know what happened with CrowdStrike when their computers went poof. Back Fortinet to a longer period, 3 years, 5 years, right? So stock has done really well over the last 5 years, but it was down to 56. Earnings came out, popped to 72. Now it's going to go sideways, collect energy, and then here's the last resistance line right up here. I'm drawing it. Once it breaks that, it's clean air up there. It's gone, right? So you guys need to be really watching FTNT. The next one is going to be, well, this is the big winner that I gave you guys. Serve Robotics, $2 to $24. Hope you guys caught it. Again, it's all on the power hours in the past. Let's look at something I'm watching, but this is very risky, so I'm just watching it. I don't have a position yet. This is Cassava Biosciences. Stock went from 10 to 42 in a matter of a week and a half. Okay. Now it's pulling back. It's down to 23. I will be a buyer with a really tight stop, maybe 10% risk at 22 levels. It's 23.86, so it's getting to the buy point. Let's look at Uber. I actually did trade Uber, but I sold it too early. So Uber was down to last Monday. It got down to 55. Earnings came out on Tuesday, which I talked about on the live stream on the other channel. Now it's almost 70. Okay, so the volatility is there. Okay, so don't complain. Do I like Uber? No, but now it's in resistance. I'll be a seller of Uber if I had it. One of my really favorites, which is winding up, is going to be a massive trade. This is the thing. This is like a generational wealth builder type of stock. I know a lot of people don't like the Chinese stocks. Alibaba has grown 300% over the last 10 years. Everything, cash flow, revenue, earnings, right? What has the stock done? Let's take it back to 10 years. This is Alibaba 10 years. Okay. It's actually 5 and 10 is the same. Alibaba was, after the pandemic, when the pandemic was done, was at 320. Okay. Now it came all the way down to 70. And now it's basing. You guys see this base that's happening here? These are the types of things you guys need to watch when you're doing technical analysis. You got to look at the long-term picture, where it's been, where it could go, right? I think the next earnings cycle turn up, stock is easily at 120. If it goes above 120, it's definitely a $200 stock. We're talking 80, right? So if you're going dollar cost average, start paying attention to Alibaba. You don't need to trade options like me. I'm going for short-term clicks, but because the percentages are a lot higher, but then the chances of the risk is a lot higher too. So if the stock breaks 81, it's definitely going to 90. I have all my resistance and support lines drawn. Okay. You just trade what the market's giving you. That's it. This is one of my favorites, Alibaba. Shopify, not so much. I put it just to watch it because earnings came out. They were really good. Here's the micro strategy. It had a 10-4-1 split, guys. Finally, Michael Saylor's company, which is a Bitcoin surrogate, and we know what happened to Bitcoin. It kind of got trashed, but then it's right back to 60,000 again. Look at the volatility on the stock, okay? Stock was 185 when Bitcoin was at 70,000, 71,000. Okay, I have my resistance and support lines drawn. Then what happened? It went literally in a week. It went from 185 to 100. But I had the support line drawn right here. This was the support. It held to the penny almost, and then it bounced to 133 now because Bitcoin bounced as well. So this thing moves with Bitcoin. If you're going to trade Bitcoin, you can do that. But you can also trade an ETF for Bitcoin if you want to get into Bitcoin. So the volatility is there. There's money to be made. This was another stock that I started following now because of the earnings. So the catalyst for me to watch a stock, first of all, there has to be a catalyst. Without a catalyst, I'm not going to watch it. The catalyst is one, earnings. Earnings were great, right? So now what's going to happen? This is Zillow, the real estate thing, right? So when the Fed start cutting rates, right, mortgages are going to drop, obviously, and then housing activity may pick up. Well, this is going to benefit Zillow. Well, if they're already turning the earnings picture around, by the way, I always tell you guys, picture is worth 1,000 words. Earnings of a company are always in the stock. The picture doesn't lie. I mean, you have to pay attention to macroeconomy, economics, micro, and in specific cases to earnings of companies. There are times when earnings suck in a company and it gets in a downtrend like it does here. I'm circling. And there are times when earnings pick up and then stocks move the right direction. But the picture is worth 1,000 words, right? The fundamentals are in the picture. So picture is definitely important. So earnings came out, stock popped up again today at 51. It's probably going to go sideways, digest this massive move because it was on Monday, it was as low as 42. Now it's at 50. So it's a 20%, 25% move. Now it'll digest, but then those are the things that you guys need to start watching. I mean, as you guys know, Carvana was one of my favorites, still is. Look, market sold off, got trashed. Carvana only like maybe 8% from its all-time high. Think about it. You need stocks. You need to be in stocks that are outperforming the market. Another one is Avago, which had a split. And Avago trade was a simple one. I mean, there's a reason I watched the 200-day exponential moving average. I mean, to the penny. I had my support lines drawn right where the 200-day was as well. Stock was 130, 128, 130, and then now it's at 150, right? So there is definitely room. If you want to trade, this volatility is creating a lot of good opportunities. So, but you guys need to be patient. And that's about it. That's my watch list, So I'll go through Avago, Carvana, Zillow, MicroStrategy, Alibaba, Uber, let's say, Cassava Biosciences, Sava is the symbol, Serve Robotics, Fortinet, FTNT, Sleep Number, Upstart, and this is the double whammy. Oh, actually, I forgot about First Solar. Now, First Solar had a massive move, had a breakout. We traded this. I leave my lines alone. This line I can get rid of now. Actually, that was the uptrend that it broke. But now, this also on Monday came right down to its 200-day average at 200. It's at 212. It's probably going to go sideways. But then when it starts moving, you guys need to be in there, right? The stock was as high as 310. In a matter of a month, it comes down to 200. 310 to 200 is 30%. But now, once it starts basing and it creates one of these patterns, right? Remember, stock moved from 200 to literally 300 in a matter of like 5 days. So volatility is there. So if you're trading options, you can make shit ton of money. Okay, but you need to know which options to buy, how far out you have to buy, what expiration date and price you have to get into. So I will talk about those next week when Chris gets back, and I have some screenshots. So yeah, that's it. That's my watch list. That's what the market is doing. I am going to put this S&P 500 up one more time. Yeah, S&P 500, 533. This is the daily. Yeah, I think right about 536, 38 range. I'm going to short the S&P 500. So if you guys want to join me on that one, do it, or follow my little account, okay, in after hour. Let's see. Okay, cool. You guys can see me, hopefully. Okay. All right, I'm back. Can you guys see me? Yes. Cool. Now there's 14 of you. Did you guys? Okay. I'm sorry. First of all, I think I messed up the scheduling. I think I scheduled it for 11:10 instead of 10 o'clock. So you guys will have to go watch the replay. Okay. I'm sorry. When Chris is not here, I'm absolutely gone. Let's talk about. I'll answer the questions. Okay. Well, we're going to answer that Mojotronics. You can talk about my trade if you want. Okay. That's Lynn from North Carolina. Let's talk about her trade. She bought Lyft. Let's look at Lyft. Lyft was shot to pieces, unlike Uber. Stock is at 966. Okay, so when David Risher took over, look at this. Okay, this is a downtrend. I mean, by the way, I'm going to go through Clean Spark in a second, answer your question. Why would you buy it at 17 to start with? But then we're going to talk about it. So here we go. Look at Lyft. Lyft got as high as 20. Now it's down to 9. Okay. Now what is it going to do? Dead money. Really, it's just basically going to go sideways. Lynn, if it gets to 11, please sell it. Please sell it. Don't be in stocks that are going down. I did a video last week called "Don't Catch a Falling Knife." This is exactly what this is. You don't need it. It's under all those moving averages, hugging the 20-day on the way down, complete downtrend. Best thing is going to do, it may do, is go sideways. I mean, if you're lucky. But 9 is pretty reasonable price, right? It hasn't been lower than 9 ever. See, 9 is like, actually 8, yeah. 8 to 9 is like reasonable. I mean, technically it's broken down. Fundamentally, it's garbage. There are look at the other charts that I showed you guys versus this one, right? So this is definitely an underperformer. You guys need to not be in these situations. Let's look at a couple of questions. I bought Clean Spark around, yeah, why? It's now 1147, just bought more, bring down average cost around 1450. Is this, yeah, okay, all right. So first of all, Mojotronics, let's talk about it. You're averaging down. How fast is my internet speed? It's 20 up and 300 down. Okay, that's how fast my internet speed is. I'm with Spectrum in California. So let's look at Clean Spark. Let's do that. It was one of my watch list stocks. It's not on it anymore, is it? When things break down, I shuffle the watch list. I don't need to be in it just to be in it. Let's look at Clean Spark. Let's see. He says he bought it at 17 and a half, and it's down to 11 and a half now. And he averaged down at 4. Why? Tell me one reason why. Tell me why. Okay, you bought it at 17 and a half. Cool. I'm assuming on this last move up. Or did you buy it on the way down? I don't know. You got to give me a little bit more color. If you bought it on the way down, your stop was at 14. Do you see the support line? I had drawn this for like months ago. And resistance was at like 2078, 21. If you bought it on the last leg up from 17 and a half to 21, and either sell it at 21 or sell it at 14, take your loss. You don't need to be in it down to, I mean, that thing hit $9 almost on Monday. You can't do that. I'm not trying to berate you. I'm trying to teach you. Another stop point, 200-day moving average. You don't want to deal with things that are under its 200-day average. When it's above it, you deal with it. Under its 50-day average, here's a rule of thumb. If you guys are not going to listen to me at all, listen to this. This yellow line is the 50-day exponential moving average. You can put that on any graph anytime you want. And any brokerage house will allow you to do that. Why don't you guys do this for a while? on uptrending and downtrending stocks. When a stock goes above its 50-day moving average and closes above it, on the first day, you buy it. And then if it closes below it, you sell it. Okay, let's look at CleanSpark. Let's look at the history of CleanSpark. Okay, so I see one time here, I'm going back to November of 2020. Okay. Yeah. So it broke out at 4. See, this is the yellow line, right? It broke out right about 4, right? This day right here. In fact, the day that it went above its 50-day average is 11/21/2023. Sorry, 11/21/2023. That's probably when Bitcoin was moving. These things also move up and down with Bitcoin. Okay, these are Bitcoin miners. The CleanSpark is the best one out. It went from 4. Okay, let's look at this. Okay, it went from 4 to literally in a month to close to 13, over 13. That's 300%. Okay, let's say you didn't do anything about it, just following the yellow brick road. I call it yellow line. Okay, the first day it closed under the 50-day average, was closed at 814 on January 1, 2024. Okay, you could have sold it at 1213 with 300%, but you didn't. You waited for the rule, which is yellow line. Okay, you would have doubled your money in a matter of 3 months, not even. Okay, now I'm not going to tell you to go short and do all that shenanigans, but now the next time it broke above the yellow brick road, follow the yellow brick road, is, and this is just CleanSpark. We can do this with every stock. Here it goes. Okay, it broke above the 50-day exponential moving average, which you should have on your charts. I have 20, 50, and 200 exponential moving average. Next time it broke above it was February 6, 2024, and it closed at 870. Let's say you bought it at 870 right at the close. Literally within 10 days, 10 trading sessions, stock was at 23. That's another 300%. Now, these are wild stocks, okay? But let's follow the rule of thumb, the yellow brick road. We bought it at 870 right at the close. Next time it closed below its 50-day moving average was this day right here, which was April 4th, 2024, and it closed at 1589. That's another double and a half, double. So twice, if you follow this yellow line back and forth, just wait until it goes below it, just wait until it goes above it, okay? There's 2 100% trades, but before the 100%, before it came back and got you out with a 100% gain, you had 300% gains. Pigs get slaughtered. You can't be a pig. And in this case, if you bought it on the way down, okay, you shouldn't have bought it at 17. So I'm assuming you bought it on the way up, which is fine, okay? And then it got into resistance and it died. Then it broke under its 50. Yellow brick road, remember? It broke under its 20. Then it broke the resistance line I had drawn at 14 for months, because it's just going back and forth sideways, right? Zigzag. You have no business doing that. I'm sorry, okay? So please read the books. Follow the rules. Don't get emotional. You don't know CleanSpark from clean whatever. So all I'm saying to you is that you got to follow your rules. Sometimes you got to take the hit. I would have sold the stock. At most, if I paid 17, I wouldn't have waited that long. But if I paid 17, when it broke the support line right at 14 and a quarter, I would have been out. Bye-bye. See you later. If not, definitely when it broke the 200-day average at like 1375. Take a hit. You got to take a 20% hit and get out, because now you got to struggle to make it back. Now, how can you make it back? Well, you can make it back if Bitcoin rallies to 75, 80,000, 100,000. I'm pretty sure CleanSpark is going to go back to 20s again, 25s, right? So it's a volatile stock. But I'm sorry you went through what you're going through, but those are the rules of thumb. You got to be careful. You can't just say, oh, I'm right. I'm like, no, it doesn't work. You got to have rules. Without rules, you're going to go to the poorhouse. Okay. 15 will be now. See, I knew I messed it up, man. Now I got to go longer, probably another 10, 15 minutes. Okay, fine. So let's see. Questions. What your option trade on Baba? I don't have one now. I'm waiting, but it will be longer dated and way out. Okay, so let's take a look at it because I expect the move to be a sustained move. So let's do that. Actually, good question. So let's look at Baba options. Can you guys see the screen? I don't know what I'm doing, so sorry. I hope you guys are seeing the screen. Here's the Baba option chain. Stock is down 25 cents today at 80. We're going to click on calls. We're going to go out far. We're going to go out like couple 3 months. So November, 133 days, or November, I'll go November 15th, regular expiration options. And November 80s are $6 each. So each option is 100 shares. So that means one option is $650. But I'm going to go further out. I'm going to go December of 2024, which gives me 133 days to expiration. Very low implied volatility. And I'm going to go to the, I'm going for the like very limited risk, but tremendous upside, right? If the stock breaks 80, it's going to go to 90. I'm going to go buy on the breakout of 80, close above 80. I'm going to buy the December 100 calls. They're like $1.62 to $1.66 bid and offer. That's like $160 per option. Okay, you buy 5 of them, it's less than $1,000, right? So that represents 500 shares of stock. Implied vol is 35, very low. The delta on this is probably about 25 cents for now, but once it goes, okay, I'll tell you one thing. If Baba goes from 80 to 90, these $1.65 options, December 100s will at least triple. Okay, there you go. That's that. Answer that question, hopefully. Okay. Whenever you're thinking to add, you should. I don't know about that. Reading John Murphy's book 2 weeks into this, still learning. Great, Mojotronics. That's all I can ask you to do. See, this is what happens. People become from traders to bag holders to long-term investors. You don't want to do that. If you're going to trade, you should read the books before you trade it. Okay. So yeah, the best one. Yeah, it is the best one in the group. It's the most efficient one. Their hash rate is the highest. Now you got to hope for Bitcoin to go up, break out to 100,000, and then CleanSpark will be 25. But then you probably bought it for a trade. You had a decent trade, couple of points, and now you became an investor. You became a long-term holder. You gotta have a distinction. What are you, a trader or a long-term bag holder? I mean, let's look what happened to all the GameStop. I put a video. I got so much hate on it. I'm like, you're all going to be bag holders. I'm like, yeah, of course. I mean, they have no clue what they're doing. Okay, cool, Mojotronics, no problem. So don't trade anymore. Read the books, adjust, do a little bit of paper trading. Okay, go watch some of the previous content. There's a lot of good information, especially at the start of the channel a couple of months ago, educational stuff. Watch those, learn, get your patterns, get your setups correct. Do some paper trading. Every brokerage house will allow you. And then no screen. God dang it. Really? Okay. Hold on. Okay, can you guys see the screen? Yes? I hope so. And now no screen. Because it's in there. Okay. Anyway, I'm messing it up. You see me. Okay. Tell me. I'm going to put the screen on. I'm sharing it. Okay. Say yes or no on the chat, please. Can you guys see the screen? When I get back, you guys should say yes or no. MGO Global. That's garbage. I don't want to touch it. Okay. Yes? No. Frick. Okay, now you guys can see the screen. Yes? You got it, Mojotronics. Okay, how about now? You guys see the screen? You guys see me and the screen, right? Say yes or no. Yes, cool. Okay, how about now? I'm going to disappear, hopefully, and then you guys should see the screen. I'm such an amateur at this, bro. How about now? You guys see the screen? Yes? And then I'm going to come back. And you guys will say yes or no. Yes. Okay, I figured it out. Thank you, Dante. Okay, cool. Let's see. Daniel. Okay, Daniel, what's up? Let me see. Daniel, my man. Internet. When you upload a lot, going with asymmetric speeds is best. Yes. Okay, I'll take your word for it. But unfortunately, Daniel, I don't have competition in my, I should call the FTC. There is no competition. It's either Spectrum or nothing. Or I can have a dish or something, which I don't know. So that's the best I can do at the moment. I apologize. So yeah, any other questions? So I went through my list. You guys hopefully saw the list. Any other questions? I'll be happy to answer stock specific or whatever it is. Mojotronics, patience. Okay, patience. Patience is a virtue, but more importantly, education. 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 Okay, what are your thoughts around UA? Okay, let's take a look. It's near the bottom. There's no such thing as near the bottom, Ernesto, but let's take a look. Okay, remove, add to the stage. I think I got the hang of it now. Let me see. Okay, you guys should be able to see it, the screen. UA, Under Armour. Okay, yes. Good find, Ernesto. Let's see. You guys see the screen? I hope you guys see the screen. When I get back, you guys say yes or no. Under Armour, definitely. Thanks for the tip, bro. I'll put this on my watch list. Cheap little stock. All right, huge volume. It based. It broke above its 200. We got a good one here. It broke above its 50-day. Let's take it back. Let's see where Under Armour was. I know it was a lot higher. Ooh. Lovely. $23 number down to 6. Got taken out and shot to pieces. Okay, cool. Good one. All right. So how do we play this, guys? How do we manage this? All right, let's draw some lines. Draw the resistance line right here. Boom. That's one. It broke out clearly at 706. It broke out, gone, gapped up, just like Upstart. Not as volatile as Upstart, probably. Above his 200-day. See, these are all the rules of thumbs. Above his 50-day. Good earnings, good catalyst. Okay. Here's the resistance line. It's closed the gap. There was a gap right here. Okay, fine. So I hope none of this is foreign to you guys when I'm talking to you. Here's the first resistance right here. Easy. 870. Now, this is not going to be a wild like NVIDIA and stuff. You got, but then percentages are percentages. I'm not going to worry about that. Draw resistance line. Here's the next resistance line. Between 870 and 9, there is resistance. Okay. And I'm going to give you guys how to play this. You guys can see this little uptrend that it had right here. Similar. Went from 6 to 9. That's 50% in a matter of 2 months. If you guys don't know, where do you think you can get 50%? Okay, now, let's pull it back. Let's pull it back further and let's add another resistance line to, boom, 11.5. Right. So stock just broke out above resistance, above 200-day, above 50-day. All good. Catalyst is good. Earnings are maybe turning around. It'll be in the picture. Don't worry about it. Up 2 days in a row. Good. Now, my prediction is going to be, I will start watching this. No joke. My prediction is going to be once this leg is finished, right? 7 to 775. I mean, look, it was 625 to 775. That's $1.50. That's over 25%. Now, what is it going to do? You guys tell me. It's going to go sideways like this. It's going to create a little bull flag. Remember the charts, you guys reading the books. A bull flag or a pennant or a continuation pattern, as we call it. And then it's going to break out again on high volume. So it's going to go a little sideways, have the moving averages turn up, have it catch up, and then the next leg will come. So definitely start watching this. I will be a buyer of this on any pullback to 725 to 705 range. Thank you for the tip. Not tip. Tips are at the horse faces. Thank you for the heads up. Yes, wonderful. See, I love this. You guys gave me an idea now. All right, what else is there? There it is. Yes, I talked about your lift. I told you sell it at 11 if it gets there. Okay. Yes. Well, you should see me. No? Okay. UA. So we did Ernesto Garcia stock, UA. Okay. All right. Any other stock questions? No? Okay. Cool. I already talked about it, Lynn. Lift. Sell it at 11, I said. If it gets there. I mean, it's good money. Better than driving. Yeah, Ernesto, good catch, bro. Any pullback, buyer. 705 to 725. Like this. Buy. This is the buy signal. See in the back of me, there are these guys. See their hands? When they do this, that's sell. And then all the signals are months and years. How many contracts? This is 5. And then we used to do this for hours of yelling and screaming at each other. And this is buy. So when my palms turn towards me, to buy. When my palms turn out, it's a sell. And then the buyers will be on the lower step. It's 3 steps. Lower step and upper step. Seller, you have to move to the upper step to sell. You have to be on the lower step to buy. Lumen stock, LUMN. Yes, that went nuts. Let's look at it. Can you guys, okay, remove, add. Okay. Let's look at Lumen stock. I actually almost traded that France 100%. It hit my scanner actually. Can you guys see the chart? God dang it. Chris, where are you, Chris? Yes. Okay, this is like a lottery ticket kind of a situation. This is like my little Serve Robotics. You guys see what happened to Serve Robotics? I gave you guys a $2. Hit 24. This Lumen looks like that. I don't know anything about the stock. Nothing. However, by looking at the volume, 327 million shares are traded. I'll bet you it doesn't even have 50 million shares outstanding. So what happens is that the algorithms get a hold of these things. Okay. So stock was $1. Then it went to $8 in a matter of, I don't know. Well, actually, the big move started at $1.50 when it broke above its 200-day average. Yeah, the algorithms get hold of these things. I had one that actually traded called ASTS. Here it is. Look at that, right? $2 stock, broke out above the 200, consolidated, move up, consolidated, move up, consolidated, move up, above 2. I mean, it's beautiful, right? These are the things you guys need to start having scanners for and watch it. But Lumen, let's give the Lumen, and let's see. So it goes $1.50 to 4, pulls back to 250, which is about 50%. That's called Fibonacci pullback. So 50%, you should have bought it. Then goes from 2.5. I don't know if there's a catalyst on it. I haven't looked at the news, but my scanner was popping this up like constantly. And I'm going like, I don't have time for that. Market's tanking. I'm not going to mess with it. Then it went to as high as 784, pull back to 5. Super volatile, by the way, guys. And I see the volume. So what I'm predicting on this one is it went from $1.50 to 7.5, 6, 3, 4.5, right about 425 to 450. You should buy it for a shot of a retest of the high. If not, about 650, you could probably make decent money. It's volatile. You got to have the stomach for it. Yeah, thanks for pointing this out, but I know about the stock. Okie dokie. Lumen, that's Lumen. Franz Iento. Ernesto, I answered that question. Queen Brown, I heard it. My video was delayed. I guess we were saying. Yeah, please. Don't put it at the. Okay, another thing, people. If you're going to trade things, don't put their round numbers. Round numbers are blockers, mental and physical blockers. What I want you guys to do, though, like if you're going to sell it at 11, Lynn, right, put it at like 1090, 1092, something like that, because 11 will be a rejection, okay? Don't do it round numbers. And if you're buying same way, likewise, if you're buying it, don't do it round numbers. Like people, I'll buy it at 11. No. It's just do it at 902 or something, or 1102. A couple of pennies above, a couple of pennies below. If you're going to buy it and sell it, don't use round numbers. Round numbers have a tendency of getting rejected. And then the market makers will not give it to you. So, But any other questions? No? Come on. I gave you my watch list. Okay, let me see where my little Robinhood account is. I'm trying to buy my UPSD back, but then see, these are the problems I have. Okay. So the problem I have is I can't day trade. Like I sold my UPSD options. I want to roll them up, but then Robinhood says you can't. This is day trading. I'm like, so what? Yeah, because I don't have 25,000 in that account yet. Those are the restrictions. I can't short at Robinhood. I can't do a lot of things, but then it's like a little casino on my phone. So I kind of cool. All right, let's see. All right, here it is. Final answer. Oh, hold on. Let me put myself in the picture. All right, here we go. Can you guys see it? 38.78. I'm up $570 today. So that's a new high for me. My old high was like at 3,300. Today we're at 30. This is with a crash of the market. So you guys know how I'm surviving. So it's almost 4,000. So it's almost a triple in a couple of months. It's pretty good. What else? Any other questions? All right. Much love to you all. I'm going to end it. I hope I didn't mess it up too bad. Chris is probably watching and saying, what is this guy doing? So let's summarize the episode. I looked at a couple of stocks. Cool. Let's summarize. Why is the sell-off happening? Why I think is going to retest. Please go rewatch it because I think I messed up the timing of the live stream anyway. It was supposed to go live at 10. I think I scheduled it for 11 o'clock. My fault. You have to go watch the replay. There is something called the unwinding of the carry trade. It's between Japan and the US. Okay. The Japanese currency went through the roof against the US dollar because they raised their interest rates first time from 0% to 0.5%. And all the unwinding that's happening and what people had done is borrow the Japanese yen at 0% interest rates, come to the US and invest in Mag 7s and treasuries. But now what happened is that when they raised the rates, the Japanese currency went through the roof, right, by about 10% in a week on the US dollar. So now you have currency risk. Now you have to unwind all of that stuff, right? So the 5% you get in a T-bill is not enough to cover your losses. And then most of it went into the Mag 7 NVIDIAs and Amazons and things. And I went through the list. Amazon is a horrible looking chart from a great looking chart in a matter of weeks. Don't forget, never, ever catch a falling knife. Number 2, market goes up the stairs, takes the express elevator down. Think about it. So, all right. So let's see if I can. What do you guys think? Can I get my Robinhood account from $1,000 to $100,000 in a year? You guys think I can? So that means if I can do it, I'm giving you guys the playbook. I don't know what else to say. I'm not bragging. I hate bragging. My Schwab account actually is like doing as well or better actually than my Robinhood account because I was short. And 2 weeks before this happened, I even explained how to short things, how to buy puts, how to sell before you buy. I mean, how to borrow. I don't know what else I can do. I'm just like giving it to you guys straight up. Mojotronic, thanks. Queen Brown. Yes, Queen Brown. Love the Queen. Thank you. Yeah. So UA is on the watch list thanks to Ernesto Garcia. Any pullback to 705 to 725. Don't do round numbers. That's a buy. It's slow stock, but hey. Okay, let's put that up. Let's not end on that. That's a bad. Okay. Okay. Well, I hope you're learning from your mistake. I'm going to end with that. Let's see what he says. I'm learning from my mistake. Okay, Franz, stocks are like potatoes and tomatoes. There's nothing special. They just have different symbols. Seriously. KISS method. Keep it simple, stupid. Don't listen to CNBC. Don't listen to the news. Just don't. Just listen to me. Seriously. Okay? I caught a falling knife in coin. Yes, you did, because you didn't have your stops. I mean, you didn't have your support and resistance. Yes, they're volatile. They will stop you in and out. If you think coin in like 3 years is going to triple, yeah, then okay, fine. Like Mojo did with CleanSpark. I mean, if Bitcoin goes to 100,000, CleanSpark is going to go to 40. Fine. But what are you? First you have to make that distinction. Don't start as a trader and become a long-term investor. That's horrible. That's what 90% do. Okay. Number two, you have to find who you are. Are you an investor? Like I am both. I'm an investor. I have two different portfolios. I trade short term, but I also invest. Great companies long term, dollar cost average, all the things I'm telling you guys. Okay. However, if you're a trader, then there's different types of traders too. There's the day traders, the hummingbirds, flower to flower. I'm going like 90% of them lose money. 90%. Now, if you're a day trader and can get into that 10% that's making what 90% is losing, you guys are amazing. You'll be a billionaire. But not too many are in that 10%. Now, there is scalper, a little bit longer term, few hours instead of a few minutes. Then there is, swing traders like me, take advantage of the swings, right? Then there is position trader, okay? Position is like Serve Robotics. I accumulated ridiculous amount of shares of like $2. And then what you do is you position trade, like you position in, position out, meaning like you're like planting a field of corn. You plant it, you let it grow, you chop it up a little bit, you chop it up again, you chop it again, because I don't know where the top is going to be. I don't know. So those are the types of things. So first find who you are. Figure out who you are, right? Are you a hummingbird, day trader? Are you a scalper? Are you a swing trader? Are you a position trader? Are you a long-term investor? And stick to that. Don't listen to anything else saying, oh, look at Serge. Serge just made, 300% in his Robinhood account. I want to be like him. I'm like, no, you can't be like me because it fits me. That's who I am. But it may not fit you. So you got to find out who you are. Yeah, I wish you luck on coin. It did bounce a little bit though. So, by the way, Franz, the best trades that you can do. Okay. So you buy a stock, it immediately goes against you, right? All right. You know what the best trades are that I've done in my 30-year career plus? Those are the trades that come back to about even or maybe a little bit of a loss. Those are the ones that you take. Those are your money makers, not the ones that they're on an uptrend, you're going to make tons of money on. Let the winners run, right? But you buy something, it goes against you, falling knife, it snaps back, comes back within a few $100s of your loss, or break even, or maybe 10%, 5% of your initial purchase price. Get rid of it. Okay, it takes mental energy from you, away from you. It stops you from seeing the good things because your eyes stuck on coin. You're wasting your good energy on stuff that you shouldn't even be in anyway. So those are the best trades you can do. Come back to even or a little bit of a loss, buy. See you later. Sell it like it's yesterday's newspaper. Rich says, what's the difference between don't catch a falling knife and buying a dip? It's a great question. The difference is like what Mojotronics did, catch a falling knife, buying a dip. Here's once you have an established uptrend, I've shown you guys this. NVIDIA, let's say, okay? NVIDIA has been on an uptrend since, split price we're talking now, since it was $10. You went from $10 to $140, okay? It took a year and a half of an uptrend. Finally, it got broken. But in that year and a half, right, every dip you buy. You're not catching a falling knife. But then you're watching your 50-day EMA, 200 EMA, 20 EMA, all that stuff, right? My point is find an uptrend. Okay, if a stock is going to go from 10 to 50 in a year, okay? Of course, there will be pullbacks. You buy those dips. If they're supported by the 50 EMA, if they're supported by your uptrends, those are dip buys, right? Catching a falling knife is you buy it on the dip and it keeps going down. And then you didn't get out, and now you're stuck. Now knife is in your heart, right? Those are the things. So my answer is find an uptrend that exists. You don't have to buy the low. You don't have to sell the high. Let's say stock is going to go from 10 to 50. Okay, cool. You missed the 10. You bought the breakout, but you missed it. Let's say you didn't. You waited until 20 to buy it. Okay? It doubled already. And you missed the top at 50, which nobody can catch the bottom or the top. But let's say you got out at 40. All right, stock moved from 10 to 50. You caught the middle 20 points. That's what it is. That's what you guys have to do. Find uptrends and work within the uptrends. Or if you're like me, find downtrends and short. I mean, you can do both ways. As you guys can see, things go down a lot faster than they go up. So you can do both. That's it. That's the answer. So I'm going to cut this off now. Hope you guys enjoyed it. Please share. Please give me a thumbs up. You know, share it with your friends. Good education here, man. Free. And go subscribe to my newsletter at www.sergioavedian.com. Click, put your email in. You'll get a newsletter about financial news and things like that. If there's no other questions, I'm out of here. I'm going to go back to trading. All right, Mojo, keep it up. Read your books. Don't do what you did. Learn. And Franz, you as well. Learn from your mistakes. Because if you don't learn from your mistakes, you will be in the broke house. Don't do those. I lost money. Okay, did I lose? You guys, I'm going to end with this. I lose money plenty, but I lose little. I lose little. Like, I have no tolerance for losses. I will sell it like my mother. If it was my mother, I'll sell it. I don't need it. I don't want it. Right? And to me, that's what you guys need to be able to do. Don't get emotional. One day it will go up. No, it's not going to go up. No, I don't care. What do I care? Yeah, one day it may go up. So, yeah, sell it. Sell things. Get rid of the headache. Keep your bullets powder dry. All right, Franz, everybody, thank you. Thank you to, who was it? Gave us UA. Add UA to your list. Great little idea. So, okay, please stay healthy. I'll see you guys next Friday. Please share. Please share the channel. Get me to 1,100 subscribers. I want to grow this channel really, really. I mean, I'm patient, man. But I want to grow it to the point that it's not about the YouTube money. It's about financial independence. Okay. And I know what I'm doing. I seriously do know what I'm doing. So hopefully next week, maybe my little Robinhood account will be like $5,000. That'll be awesome. And see, I know what's going to happen. If I can get to that thing to like 10K, then game is on. Okay. Definitely game is on. But I will see you guys next Friday. Share, subscribe, thumbs up. Much love. Please stay healthy. Oh, look at, okay, I see, this is cool. Caught the top on Upstart today. Trade investors. Okay, swing trade. You didn't catch anything on Upstart. You may have caught the top on Upstart for an hour. I think that thing is going to like 80. I hope you had options. I hope you made money, because I did. I gave you guys that last week. Yeah, you just caught the intermediate hourly top. There's no top. Oh, by the way, on Upstart, there's 25% of the outstanding shares are short. Short covering hasn't even started on that yet. That thing is going to melt up. If I'm correct, game has just begun on Upstart. UPST is the symbol, people. Any pullback, do this. Any pullback. All right, cool. All right, stay healthy, stay safe. I'll see you guys next Friday.